The day after S&P handed the country another debt rating downgrade. It's now BBB-, that's the lowest investment grade. Now, outgoing Prime Minister José Sócrates insists that the country still does not need a bailout. But Lisbon's problems are getting deeper. It must find €9 billion for bond redemptions by June, and Barclays says it has no more than €5 billion of cash left. And now that's just enough to last out April. What's more, the IMF has spoken out about the decline in sovereign ratings around the EU periphery. Now, its economists say that downgrades are having systematic and significant effects, threatening to create financial turmoil in the Eurozone and beyond. Well, when Portugal was first downgraded, it wasn't just a sovereign rating that was cut. Standard & Poor's this week also slashed the credit rating on several of the country's banks. Among them was Banco Espirito Santo, Portugal's biggest publicly traded lender. ECB President Jean-Claude Trichet has hinted that Portugal's lenders are relying too much on the central bank's emergency funding. But earlier this month, the government in Lisbon denied that its banks need cash help. The government has now fallen, with the Prime Minister Sócrates handing in his resignation. The question is, where does that leave Portugal's lenders and Banco Espirito Santo? Well, joining me now is a man who has spent his entire working life at the bank. José Maria Espirito Santo Ricciardi rose through the ranks to become chief executive of its investment arm and one of the most important men in Portuguese business. He also is a board member at another of the country's largest companies, Utility Energias de Portugal. Thank you so much for joining us today.
Thank you very much for the invitation. It's a pleasure to be here.
It's a pleasure to have you. It's difficult to actually understand the situation in Portugal. This is almost a deja vu of what we've seen over in Greece and then what we saw in Ireland. The market saying one thing, the bankers saying another. How do you assess the situation? Will Portugal need a bailout?
My opinion is that the market perceptions are not right. I had the opportunity to say it several times. I don't see any change of the fundamentals of our economy to these two downgrades. If we look to the basics, to the fundamentals of the Portuguese economy, we can see that we were the only country that has increased its GDP last year, 1.4% of the southern periphery countries, for example.
Is this not the problem, that even though the fundamentals don't change, your yields are going up? And this is something that we've seen with a lot of the peripheral countries. We touched 8%. When you see that Germany is financing itself at 3.5%, how can you sustain that?
Yes, but the yields go up exactly because the perception of the risk, of the sovereign risk of the country. And what I think is that if we make a comparison between Portugal and Greece and Ireland, we don't have the comparison. We cannot say that's similar at all. We have, for example, our public debt of GDP, it's 82% in 2010, for giving you an example, and this is slightly lower than the area average. This was not the case of Greece, for example.
But so how do you change that market perception? Because often it is a market perception which has forced countries to seek a bailout.
I think the way that we must force the market perception is exactly trying to do what I am doing, which is explaining our real situation. I've listened a lot of people saying Portugal must be bailed out, but they don't explain why. We have a sound financial system, which was not the case of Ireland, as you know. And our public accounts, I will not say that we are in a very good situation, but I don't think that we are in a comparable situation of the countries that were bailed out. And I would like to say that if we are bailed out, now the probability is high, this will not be, in my opinion, the last European country, because I think that some part of the markets are testing several countries in the euro, and then if I may say, they defeat us, they will then go to other countries. It's my opinion.
Are you telling me, and this is your opinion, that if Portugal asks for a bailout, the markets will focus on Spain?
I think so.
And that they will need a bailout?
I think so. I'm not sure that they will will need the bailout, but they are doing now with us, and they have done it before with other countries. Then when we will be bailout, they will then go to other markets. It's my opinion, and I think that the euro is that danger. It's why I think that we must resist, and even because of the fundamentals of our economy, we don't have any specific that put us in this situation. It's true that we are going through some structural problems of our economy, and our economy in this last decade has had a poor growth, for example, but we don't have, in my opinion, solvency issues for being downgraded in 2 or 3 days, 2 times, and things like that.
Of course, one of the perception and the problem is that you may not have enough cash for the redemptions in June. And we're talking now about bondholders taking a haircut. Now, you work in the financial business. Would this be the wrong message if you were to impose certain haircuts for senior bondholders?
There are some analysts that say that we don't have enough cash. But until now, we have already finance almost 40% of our long-term debt of 2011. And even in such a difficult situation like we are. So let us see if until June we will not have the cash. I'm not completely sure about that, but as these people predict, if we will not have enough cash, we will have to be bailout.
Talk to me also a little bit about your bank, because again, we have the ECB saying we're concerned that certain banks, they didn't say which ones, but over in Europe in general, are on life support. How much access do you ask from ECB to fund, and when will you be able to fund yourselves on the markets again?
In what respects of my bank, we are in a comfortable situation. I can tell you that the facilities that we are using in ECB, it's something like 3.9 billion euros for a total asset of 100 billion. This is a very normal ratio. And we have different funding pools in the world, because now something like half of our activity is outside our country. So I think we are in a comfortable situation, even if because of the Republic's rating, we have now the wholesale funding close to us, but we are concerned, but I think we will overcome.
Now, you're the head of the investment arm of Banco Espirito Santo. How difficult is it for you to attract business? Do people, say, well, actually, I want to see what the situation in Portugal is at? I know you also want to expand internationally.
Until now, very well. As I said, in what respects investment banking, 80% of our banking income and net income is outside Portugal. We must see that Portugal and ourselves, we have a very we have some competitive advantages with the South Atlantic. We are in sub-Saharan Africa, we are in Brazil, in other countries of Latin America, and our business now in London and in New York and other places, our business is being very well developed, and we feel very well until now in our activity.
So what's your biggest concern for this year? Certain CEOs, especially of banks, have been telling me when interest rates go up, because of the ECB, it's the countries like Portugal's that will suffer the most.
Yes, for sure. But what I would like to address here, and the opportunity that you are giving me here, is that, as I say, I think that there is a disproportion and not a very well perception of the risk, and I think that this will have other consequences. I think that in the European Union, the leaders must look for this in a different way. We see that intervention in Greece and in Ireland, they are not going very well, they are not resulting, and so in what concerns Portugal, I think it's still the time to find other ways to manage this situation that will be a problem for overall the euro area and for our country for sure.
Maria Ricciardi, thank you so much for joining us on the show today.
Thank you.